Hey, what is up? So going into the market today for actually it's October 1st today. There's a big sell-off early hitting it over here. And let me just show you what I'm looking at going into tomorrow. Is a great trading day today. So hopefully tomorrow continues to bring that great action. So right now here on the S&P 500, what we are looking for, this would be a trade looking at going into tomorrow. It is not currently live yet. But when the price closes above right here, the green line right there, that will be the signal to go long, with the original exit being this yellow line way up here. Now, normally it doesn't go up there and hit, and maybe 5% of the time it actually does go up there and hit, because what we also do to it is I attach the fib down there to the bottom, and then if it closes anywhere, whenever it closes here at the top and retraces back down to the 23.6, then the exit goes here to the 1.146. Then we change it. But what also can happen, since you can see it's gotten real close to hitting off on this line right here. You know what? I'm going to take these off. I thought I liked having the 0-1 line on there, but I do not. So as you can see, price is not closed above the green line right there yet. And so if it comes like down here, let's say, well, shoot, let's say even when the market opens here tomorrow at 8:30 a.m. my time right there, if it hits right there, well, then you can see the price will be, say it opens up right down here, then we'd leave the Fibonacci retracement down at that low right there and that current high. So say at 8:30ish, somewhere right there, close above it. Well, then the exit we would have right here, since I already hit the 50%, is going to be up here to around where the current high is, because that's the next level we go to after the 23.6. So that's how that would work out right there. So we'll have to see what happens tomorrow. I mean, we still could get even another more of a down day here tomorrow and go down even lower down to it. So we just have to see what happens, but it's definitely the best trade right now looking for here in the S&P 500. There is a smaller one. Let's see what this one looks like here real quick. This is another setup we have using the triangle trade. And there's the low, the higher high, and then the low. So as you see, there's the low, there's higher high, and then there's the lower low way down here. So when price closes above it right here, that will be another one to look at going long right there. So I'm gonna mark it right here on my chart as well. So going into tomorrow, we have a couple really nice looking setups here in the S&P 500. And then here is one right there. Let's see what this one looked like today. I'm not sure if I got this one or not. 1, 2, 3, 4. So price closed below it right there. That would have been the signal to go long, but then it retraced back up. Yeah. So hit the 23.6 and then hit down here for that one. So that one's said and done. Even though price did go all the way down and hit the yellow line down here, the kind of like safety valve I have is to get out for right there. But you know, occasionally it does go down there and hit it without retracing right there and hit it, but that time it did not. But anyways, those are the two we're looking at right there. Going on into the Russell 2000, the only thing I'm looking at for Russell 2000 is a long-term trade we have right here. This one I always cover. Still waiting for price to go back down and hit down here at the top of the 23.6 level, which is right there. Right here where the top of that green box is. That's the 23.6. I'm going to exit out a little bit earlier. So we're just still waiting for more weakness here in the market to come back down. And I always get out a little bit earlier to come down there and hit it right there. I did get down to the 2.618 level. I've since changed that for my settings for when, or for my setups for when I want to get in for this long-term trade setup to the 4.236. Price can go higher than that. Of course it can. It has done plenty of times. But what I found, it seems like the 4.236 seems to be the good kind of risk reward ratio, where if price goes up and say it goes all the way up to 17.89, which it has done before, and even 11.89%, you can get in, or I do get in there again at one of these levels, but the 4.236 just seems to be the best level to get in for it. So this is using the shift pitchfork, and this is a long-term trade we have right there. So the only reason why, or the reason why I'm kind of not liking taking these trades anymore is it just ties me up, because I mean this trade has been going on since it initiated 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 business days right now. So 3 weeks. So this thing can take, up to a month for it to come down and hit, but it's all right. Going into the Dow Jones right here, there is currently a long setup. Same kind of setup that we have, a short setup, same setup we have for the Russell 2000. You can see there's a shift pitch fork. It came closed down below it, went back up there, hit the 1.146. That moved the exit down here to the 23.6 level, and it does not move since then. It has come up, just ticked off the 2.618. That was a trade with another setup they had, took it to short it, but the ultimate exit is down here, way down here. I'm not looking to get in right there though, but if price does go up there and continues to go up, hit the 4.236 up here, then I will go short it for a longer term trade right here. But until then, right now, we're just taking more of the day trade setups, sometimes swing trades where we have to have them overnight, because the one Dow Jones we had overnight, I think oil as well, as soon as the markets open, those things got filled up really fast. But what we're looking for right here, so what we have is the 1, 2, 3, lower low, higher high, 4, going to be right there for that one. Not sure if this was going to make it through, because what we need a kind of a strong down day here tomorrow. Say something like that. I guess not much. What time is that? 2:10. There's the market opening. Down a percentage point. So yeah, that's what we need, at least 1.2 or so percentage points. So yeah, it would take a little bit of push down, but that is the short setup we're looking for right now here in the Dow Jones. Not saying it's going to happen, but that is the one currently that I'm looking at. So that's really the only thing going on here for the Dow Jones. Going on to crude oil. Crude oil had a wild day today. Let me zoom out a little bit to show you what exactly happened right here. So going on for over here, here's that shift pitchfork trade. It's just ABCD setup, ABCD right there. And then price from the top of it right here came back into 23.6. So that was the original exit right there. It didn't go up there and hit it. Came down and hit the 50. So that moved the exit to the close high, which is right there. That didn't happen, and then price came down and hit the 1.146. So then that moved the exit to the 23.6. So since then, the price had just waffled along down here, and then today, for whatever reason, well, there was a was it supply fear or something like that. Price, I haven't paid too much news today, but then the price just took off, and then at time is that at 8:30, right when the market opened, had this huge strong bar right here, went up all the way to where the exit is for that move, and hit it right on top right there for it. So that's the trade setup, that the longer term trade setup that got complete today for it. So I'm gonna go ahead and delete that. But we are in another setup, and it's actually a runner, or was a runner earlier today. It was one I was looking at since yesterday, and it's this one, there's that one, there's the low, there's a higher high, and then the lower low is all the way down here. And so this is where you draw your in fact, I need to move this thing. Not sure where it's there. It should be right there. There we go. So there's 1.1, 0.2 lower low, 0.3. You know what? It's I'm not having the wrong thing. No, that was right. It's for another trade that I was looking at. It's for the yellow semaphores. This is for this one right here. And there we go. So when price closed above it right here, that was a signal to get in right there. And then price, it looked like it was running getting really close to running up in the yellow line right here. You see it came pretty close, but I got out right here, because right up here is where the 23.6 level from that long-term trade I just showed you is at. And so what I was hoping it would do, which it did do to a certain extent, is when it hit that level, it would get a retracement. Because I felt like there's going to be a retracement, because the market pretty much ever since the morning when it opened all the way down here, I mean, there's a huge run up in it right there. It was, 5.3%, 6% before we finally got a pullback, which is just ridiculous right here. I mean, all the way down from, it's about 67 all the way up to almost $72 right there. I mean, that's a huge move in the oil market right there. So got in right here. Which one is it? Right in here. And that sell was one from an overnight session that we're having for my trade to get complete. So I pretty much reversed my trade, got out, sold my position that I was, excuse me, I covered my position because I was long going down over here. So that filled it up, and then because that was an older setup that I got complete. Then got in there 62.94 or 69.24, and then got out at 76 for that one. So then when price finally came back down, and let me take these black lines off, they're just the 0 and 1%. I was waiting for the retracement, came back down to 23.6. I actually missed getting at the 23.6, but it got in a little bit better just because I went up my computer at the time. So now the exit we're looking for right here for oil is 72.76. So there still is some more room for oil to run up from where it is right now. So if we get another update tomorrow, then the target we're looking for is going to be at 72.75. So I might exit just short of it, probably like 72.50ish, something like that. But if price goes back down, it goes down to 50%, then the exit moves to the close high of that move, which is the bottom of that box right there. And I'll have my exit probably right. I usually take this one a little bit lower because that's ensure I get at a safe place where a bunch of support and resistance are, which seems to be kind of like that level right there. So I probably have my exit right there for those two. But then if price continues to go all the way down to the 1.146, then the exit moves to the right there, to the 23.6 level box right there. So that's the oil trade. So still a really good trade going into tomorrow. I wouldn't mind if price came back down to 50, so I can get in with another contract and then get out somewhere right over here. But if it just goes up to the 1.146 to continue that bullish momentum going into tomorrow, then hey, that's great as well. Last but not least, the Nasdaq. This is another long trade setup that we're looking for right here. So we have this one there to higher high and then lower low all the way down here. So there we go. This one will probably end up turning into a red semaphore as well eventually, just to get a little more time. See, semaphores, they don't turn right when the market is to let you know. It's not like an advance. It's a what is it? After the market happens, then it confirms it. And so I just use them for that. So you can't like trade off of these because it's not like a red one just comes in. It's like, oh, the market's stopping, time to short it, or you get a red one down at the bottom right here, and it's like, oh, the market's stopping down here, time to buy, and we'll go long. It doesn't work that way. It happens after the fact. So what we're waiting for is price to close above this green line right here. When it does, we'll look to go long, and just like the other ones, we'll draw our Fibonacci levels. Originally we'll try to look for a runner up there, but that didn't happen a whole lot. So we'll try to get a good price and then look for the Fibonacci levels if price, which more likely will come back and hit them for that. So that's what we are looking for in the Nasdaq going into tomorrow. So it's setting up. If we do get this move higher, both in the Nasdaq and in the S&P 500, for a positive day in both of those markets. In both of those markets. Why isn't I guess I deleted it. So what does this one look like? So yeah, we have that one, and then we have, which other one was it? I got too much stuff on here. I think that one's off. Yeah, take that one off. There we go. And then we have this one right here. So two potential long setups here in the S&P 500. This long-term short, I'm already in for the Russell. And then for the Dow, this one is looking different than the other ones. We're looking for a short setup here, below here, but not sure that one's going to happen. So perhaps look for something else. Oil currently in one, a long setup, so looking for a little bit move higher here in oil for tomorrow. And then for the Nasdaq, just mentioned a second ago, looking for this to close above here and go a little bit higher here tomorrow in Nasdaq. So that's my prediction for tomorrow if those things go and confirm. Looking for kind of like a green day in the S&P 500 and Nasdaq, at least for a while until this trade setup's going to get hit. And then for oil, looking for a little bit more of a continuation through going up into tomorrow. All right, thanks, bye.